Happy Thanksgiving to everyone around the world and everyone in the United States. Time is 7:46 a.m., 11/28, 2013. What do we have before us? We have a weekly chart. That's number one. Number two, we have Dow 16,000 in calendar 2013. Back in 2009, it's been a great run. We had 1 year here. We had the second year, we've had the third year, we've had the fourth year, and now we're in the fifth year of this bull run. What I will tell people is that we are going to have market volatility that's going to increase. And one of the things that we'll say on the Dow versus the S&P is that we're in what we call an extreme overbought level. So the Dow component has 30 stocks in it. That means that those stocks are overbought and that the big money is going to ring the cash register. Historically speaking, we put lows in November and we rally up into Christmas. Well, they have robbed Peter to pay Paul, and that some of this overbought levels that we are involved in right here is that I will draw a trend line here, okay, and that this trend line is going to come right down here at various times. This is where the breakout started in calendar 2013 right here. Then we rallied up and we consolidated and we got extremely overbought in this cycle and we had a big pullback. Let me just tell you that we're going to have another one and we're going to be watching that the Christmas rally that everyone will be looking for is already priced in the market. So it's time to sell and it's time to take money off of the table. Fund managers will be selling. We take a look at the bear and bull count, meaning that the bear is the most minority side of the market, and all of the bulls are very, very complacent. We've had an extreme move. We are into this territory. It reminds me of like 1999 all over again, and a lot of type of behavior, market behaviors, is everyone's all in the Dow right now. So when we had the last correction, we had two of them. We'll start right here, 519. We'll start with the high of the Dow was at 15,005, and that was an extreme area, and it was overbought 92% on the weekly chart, and we went from that level clear down. We hit the low of 14.5, and we were overbought. That was roughly almost 1,000 points. We rallied and we made another high. So that was a big, big correction. And let us just tell you one thing, that the amount of bulls paid a price when we got overbought here. Then we rallied up and we made another high. But let's just talk about this. The high here was 15,542, and that pullback that we called for was the low. When we put the market low in, it was 14,551, and then we rallied up from that level. We made another extreme overbought level, and once again the high, we came right back and made the high of 15,658. That was the high right there, but then the reversal high was 15,665, and we said, hey, we're overbought. And so we went from that level with another big pullback to the low of 14.7. And that's where the market put in the lows, and then we rallied up and we tested this double top right here on the weekly to the high of 15.7. But we pulled back from 15.7 to the low here of 14.7. So in this particular index, we came and we tested what we call a double bottom there, and we rallied up to this very level now to 16,120, 16,000 Dow effect. So what we will be very clear about is that there's a correction, and that we started out here with markets putting lows in last year in November, and then we started out the calendar month and we made a big bull run to the high and we were overbought in these levels. It's time to ring the cash register. The price volatility is going to increase. It is Thanksgiving and Christmas is coming upon us where we normally have big rallies like last year. Let me just show it. We were exactly that low last year, and we're going to point it out once again, was right here. And what was the calendar month? How ironic that it was 11/11, and we put the bottom in at 12,471. We rallied up and we made highs in here, and we kind of, the highs there were 13,365 on the Dow. Now we started out with the rally here. It took place. The low was 12.8, and we started out here in January effect. The low was 13,299, and we rallied all the way up to all-time highs of 15,542. So there is a pullback coming. I will tell people that yes, there will be in the Dow, and it's extremely overbought. We're going to look at short term, and I'm going to use the word short term, and we're going to look at the bear ETFs that are related to specifically the Dow. We're going to take a look at the most overbought stocks in the Dow 30, and we're going to start taking some short positions because the markets are going to pull back. Each new high in here is going to have a pullback. We're at the psychological level. This run, when you take a look at the calendar low here in January effect, let's just do the math. 13,293 to 16,000 right here in the Dow, 16,120.25. We've almost have rallied up a total of 3,000 points in a calendar year. 2014 will not be the same as 2013. And we've been in a bear market for 12 years, and now we're making 13 years ago, we're making all-time highs in the Dow from the year 2000 bubble to the 2008 bubble, and we are getting in the territory where new bubbles are setting up. And the problem is people are chasing performance at overbought levels. We could go a little bit higher in that Dow, but not every little bit uptick is going to go into another level of what? You're going to hit a wall of resistance. So we're going to be, once again, we called the pullback here, we called the short here, and we had 3 pullbacks, and everyone is going to be expecting a rally for Christmas rally. Well, I'm sorry, the Christmas rally's already here, and we're at all-time highs. So if the market was at lower levels, then we would say, hey, you're going to get a big rally, but we're not. It's all priced in the market. The bull and bear count are at absurd levels. Once again, happy Thanksgiving to everyone. And I will say it's time to get some bear funds. And those bear funds will pay in the short term. And I said short term. And throughout calendar 2014, you're going to have some big pullbacks. We haven't had a 10% correction in these markets for a very, very long time to get close to a 10% correction. So what I am going to say is that we will have a 10% correction sometime in 2014. It'll probably come sooner than later. And that the January effect, the Christmas effect and the January effect for 2014 is that stocks are not on sale. They're overbought. They're overbought. And it's been a good run for this calendar year. And what we are saying to everyone is it's time to ring the cash register and get on the other side of this market because it's extremely overbought. It can get a little bit higher. This one's at 94% on a weekly, and the S&P is at 97%. So the bull run is going to run out of steam, and it's time to take profits. Happy Thanksgiving.